Good morning and welcome to the SERINUS Energy PLC full year results for 2022 investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated on the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Jeffrey Ord, CEO. Good morning to you, sir.
Thank you. Good morning, everyone. Welcome to the financial results for the 12 months ended the 31st of December 2022 for SERINUS Energy. My name is Jeffrey Ord. I'm the CEO. I'm joined by Andrew Fairclough, who is the CFO, Stuart Morrison, our COO, and Calvin Brackman, who's our Vice President of External Relations and Strategy. As per usual, I'll give a bit of an introduction, a bit of the highlights of the year, a bit of what's going on right now. Then I'll hand over to Andrew to go through the results, and I'll pick it back up at the end where we can do some closing comments and take some questions. 2022 production for the year was 889 barrels a day. That was down principally because of Romanian declines. It's also down because the SERINUS permit in Tunisia expired. We had 18 months prior to the expiration of that concession. As per the statutory requirements, we had proposed the work program and extension to that permit. That was about 100 barrels a day in Tunisia. The 18 months we spent trying to get a response from the government, we had no response. The license expired in 2022 in June, and we still have no response as to where this license is. So this has happened to other operators in the country. I'm told that there's about 30 concessions that are sitting with this expired but unapproved situation. Larger companies like ENI decided to continue to invest and continue to produce off their licenses. We had plans to put pumps into SERINUS, but clearly we were not going to put capital into the ground only to find that the license was to be taken away. The license can only produce through our SERINUS facilities. There's a pipeline running from SERINUS up to SERINUS. So we're very much the only company that can operate this, but we have had no response and an inactivity from the government of Tunisia as to the extension of this license. So that's about 100 barrels a day out of Tunisia, and the rest is declines on the Moftino field in Romania. It was a tough operational year. I don't think there's any pretending that the two wells in Romania were not successful. We did encounter gas in all of the targeted reservoirs. However, the gas was not of sufficient quantities to justify the development. At the time and at the prices we had last summer, there was consideration of developing one of those wells. The view that gas prices would not stay as they were last summer was correct. And therefore, had we gone ahead with commercial development, those would not have been justified commercially. The Kennar-1 well, we have taken that well and we've installed water injection pumps. These are solar powered water injection pumps, and that injects water from the Moftino field into our own well. Prior to this, we had to truck water to a disposal well that was some distance away. There's not a lot of disposal wells in the region. This well will save us about $800,000 a year in water injection fees. We are encountering more water than we expected in the Moftino field. So this is a cost savings. As the field declines, the water production increases. So having an injection well is valuable to us. We talked about the compressors. Early last year, the second compressor was put on stream. The compressors are doing what they're supposed to do. They've stabilized the production, and they will extend the overall life of the field. Additionally, there is behind pipe gas, so gas zones that have not been produced that we will incrementally bring on over the course of the remaining field life. So there's still gas in the field. The field will continue to produce, but without drilling more wells on the field, there are considerations of further development wells, but without drilling those wells, the production will not increase. After the two exploration wells, we instituted a block-wide review of all of the geological information we have across the Satu Mare concession. And you remember it's a very sizable concession, so pulling together all the wells, all the seismic, and building a complete geological model across the concession will allow us to refine our prospects. Now, you remember we have 181 million barrels of prospects on this block. Very, very attractive block, very hydrocarbon rich. It's just a matter of finding it, and it is exploration now. So that block-wide review it was ongoing at the end of the year. Results of that are coming in, and we will incorporate that information to determine what we're going to do next on that block. In Tunisia, again, a very frustrating, difficult year last year. We announced that CTF, the rig company, had defaulted on a rig contract that we had. We only managed to get that rig into the Sabria field in December. We kicked off, and maybe I'll leave it to Stuart to give an update on where we're at with that workover and the timelines for that workover. Stuart, do you want to talk about the W1 well?
Yeah, so as Jeff said, we got the rig into the field in December, and we had some last minute delays because of the rig acceptance process, where, for example, getting the right identification of blowout preventer seals, which is a safety critical element, took some time, which we hadn't anticipated. But we got on with the workover. We had another late change to the operational plan because the methodology of using small charges to remove the tubing, unfortunately, we didn't get the permits for that. So we had to change tack and take a different approach to getting the tubing out.
Let me be clear on that one. We wanted to use a small 100-gram charge of dynamite to cut some of the tubings that are inside the well. The last time we applied for a dynamite permit in Tunisia took us 4 days. We applied for this permit well before the rig showed up. It started November, well before the rig showed up. We received that dynamite permit 2 weeks ago. So again, the process of the government granting permits for operations has very much slowed down and is very cumbersome. So as Stuart says, without being able to use a dynamite charge, a small dynamite charge to cut pipe, we've essentially had to start pulling on it. And Stuart, do you want to finish off where we're at right now?
Sure thing. Now, let's remember it's an old well. It's 40 years old. Some of the tubing has come out in long pieces, hundreds of meters at a time, and other times it's been small. And it's really quite, well, it's impossible to tell exactly how many pieces is going to come out in. So the duration has an uncertainty around it. But the well conditions have proven a little bit more arduous. And the reason for that is that there have been some shards of metal from old operations which were not documented. So that's taken a bit longer to grind that out, to get hold of tubing and then pull. So this is why we're a bit behind, but we're well advanced with the workover, and looking forward to the success of the pump installation.
Yeah, so where we're at right now, we're on day 66 of operations. We're just over 90% of our AFE. We will continue to work this well. It is virtually impossible to predict what kind of lengths are going to come out. All of the remaining tubing in the well could come out tomorrow, or we could continue to pull out 100 meters, 14 meters. It's variable. It's where we pull and where the tubing parts. So we haven't been able to give an update because the entire unpredictability of how we're pulling this out. It is coming out. That's the good news. It's taking longer than anyone had hoped for, but we are progressing, and we're at about 2,800 meters of the last section of tubing that we have to pull out to get down to 3,400 meters. So about 600 meters more to go. As I said, 600 meters could come out tomorrow, or that could come out in 50-meter chunks. We can't tell where it's going to part when we pull on it. So the workover is ongoing. Aside from the slowness of working on a 40-year-old well, the workover is going, as it should be going, but we are behind. Workovers in the Schwesh and Esch-Schwesh field continue, so we do continue to keep the pumps going. This actually added reserves on our reserve reports that have come out this year. So the pumps work. When I joined the company, pump life in Schwesh was just over 7 months. Our pump life now is about 24 months. We're closing in on 24 months with pumps. So we've managed to increase the pump life. The guys in the field working the pumps are far more adept at working these pumps to get out the most we can. So we've learned a lot in the Schwesha side of the field, and we hope that knowledge can be applied to Sabria when we start getting pumps in there. I talked about the reserve reports. Reserve reports have been completed. They'll be up on our website. Gaffney Klein has given us the independent reserves report and attribute $85.4 million of net present value at a 10% discount rate to the proven and probable reserves. And the last event of the year, right at the end of the year, start of this year, was the judgment from the ICC arbitration against our former partner. Now, people will remember we've always called this a deemed 100% interest in Romania because our partner defaulted, and under Romanian law, to transfer title, the Romanian government requires both boards of both companies to agree to the transfer of titles. OEBS, which was our former partner, had refused to provide any documentation to the government. We have been recognized as the operator and 100% holder of this, but we had to go through this arbitration to get that to be gazetted. So that is going through the final steps of transferring the interest in Romania now. The judgment gives a settlement on costs, so we will be expecting about $265,000 of legal fees to be reimbursed to us for the cost of that arbitration. Current events. It was a bumpy year with commodity prices fluctuating wildly. Inflation, I think 2022 was the year of materials inflation. We saw some pretty wild inflation on some of the materials we use. I think 2023 is looking like the year of services and people inflation. We've had inflation in materials stabilize. That means it's not going up. I don't think we will experience cost deflation. I think this inflation is a step change to a new level of costs. So we have to be very careful on our cost management. And I think this year we'll start to see the services and the people inflation costs. So inflation is still a feature. It still has to be managed very carefully. Oil and gas prices. Well, obviously we've seen oil prices collapse $10 in the last $10 a barrel in the last week. We've seen gas prices come down quite considerably. On European gas prices, we expect to be in a sort of a counter-seasonal pricing scenario. Typically, gas prices are higher in winter in the heating season and lower in the summer. Last summer, we saw record high gas prices as Europe struggled to fill up storage before the winter. We expect to see that same sort of storage build starting in the latter half of the year, building towards winter. I think we all know that it was a fairly mild winter in Europe. Europe did an amazing job of relocating its gas supplies away from Russia. But again, this winter, Europe will need to build stocks, build storage. So we expect to see that counter-seasonal spike in gas prices towards the middle, towards the third quarter of this year. In Romania, we've done a lot of work looking at what we can do on exploration. We explored adjacent to the Moftino gas plant because it's a piece of infrastructure that exists. We looked for small fields that we could tie in quickly for cash flow. Those fields were not successful. We are looking more broadly at some of the larger prospects on the block. Some of those larger prospects are far away from Moftino, but it's the good news in Romania is you're always fairly close to gas infrastructure. So any of the prospects we're looking at would be very close to the trunk lines and could be brought on stream relatively quickly. In Tunisia, we continue to look forward at the artificial lift program. In terms of capital for this year, we would like to get the pump into the Wind 12 field, but of course we need to get the pump in W1, and then we need to get partner approval to go ahead with the Wind 12 pump installation. Our partner has said that they would like to see results from W1 before they approve capital to be spent on Wind 12. So that decision will have to happen in the latter part of the year. In Romania, we'd like to do some more 2D seismic to cover where we identify prospects, where we decide that we're going to drill. We'll then decide on a prospect that we're going to pursue. So towards the third quarter, latter half of the year, we'll take a look at doing a 2D seismic over top of where we think the prospects will be, and we'll update accordingly. This is very much a work in progress as we take the block-wide geological review. We refine that into prospects. We then put a little bit of seismic over those prospects to give us the best chance of success, and then we'll go ahead and drill. So we'd like to get a well drilled on a prospect in Romania this year, but that really depends on permitting, depends on our location, and depends on rig availability. So it's difficult to predict, but our aspirations would be to do some 2D seismic and another well in Romania. So that's where we're at with the operations. I'll hand it over to Andrew to go through the financial results of 2022.
Sure, thanks. So 2022 has been a strong financial year. We generated revenue 49.3, nearly $50 million, and we also delivered our second consecutive year of net income. Gross profit was nearly $13 million. We are continually managing costs, but of course we have the impact of the windfall tax, which is directly associated with the gas price. And you'll see later how that has impacted our cost of sales. It's worth noting as well, though, that the Moftino gas plant in the year, since first gas, has produced revenues of nearly $91 million, which highlights the returns that are available from these low-cost, shallow gas fields that we have exposure to in Romania. Cash flow EBITDA, $12.7 million. We are very focused on cash generation, as that is what facilitates and allows us to continue to invest in the business. We had capital expenditures of $12.9 million in the year, of which 8.4 was in Romania, associated with the 2D seismic, the 2 exploration wells, and 4.5 million in Tunisia, which was very much around workovers in Schwechat and the build-up to the artificial lift program that has commenced. And as I said, net income for the year was $1.6 million, which also included an asset impairment in relation to the Moftino assets. Of course, we benefited from strong commodity prices, and that generated an average net realized price of nearly $150 per BOE through the year. That was a realized oil price of $94.39 per barrel, and a gas price of $34.53 per MCF in Romania. And of course, operating netbacks remained strong at nearly $108 per BOE. Again, resilient netbacks in Romania, $181.57 per BOE, and in Tunisia, $54.34 per BOE. So again, strong, consistent netbacks through the year. We closed the year with $4.9 million of cash on the balance sheet. Looking here, I mean, the note here, looking at cost of sales, I think it's important to highlight. We see the impact of the windfall tax. Last year, so in 2021, windfall tax was $9.4 million, and that this year, in 2022, increased to $16 million. So that has a material impact on our cost of sales. Nevertheless, gross profit was nearly $13 million. And again, you know, we manage the costs that we can manage, and there are certain elements that we are recipient to as a result of the commodity prices. And the net income, $1.6 million. It's worth noting and reminding that last year, of course, we had the release of $6.6 million provision in 2021. So $1.6 million, which included an impairment against Martino, $1.9 million. So again, a second consecutive year of net income. Jeff talked about production volumes. Again, just reiterating here, you can see stability in Tunisia, the production. That's with good, strong performances out of Sabriya and Schwechat cider, and of course offset slightly by the loss of the EC1 license, Schwechat license in the middle of the year, which we expect to regain. And Romania continuing the declines, which will be managed by the introduction of compression. Average realized prices, again, you can see quarter-on-quarter progression through the year remained pretty strong, with a little bit of a tail off towards in the last quarter of the year, but again, consistently high, with strong commodity pricing. On production expenses, Jeff mentioned that Romania, you know, we have two elements. We have the water handling costs, which we incurred through the year from the second quarter onwards. We see that those going forwards will now be managed through the water injection well at Canal 1. So we have a strategy to eliminate those from our cost base. And of course, as we highlighted from the half year, where we started seeing very strong inflationary pricing coming through in Romania. By way of a reminder, propane, for instance, was increased nearly 70%. Electricity, similar 65% increases. Fuel was nearly 40% increases. So it was a very sort of substantial impact coming through the year in Romania in particular. Operating netback, as I highlighted on the first page, again, very strong, consistent through the year. And we closed the year with an average $107.59 per BOE for the year. At the end of the day, the strength of the cash generation out of the business, that really is what supported our investment program. And again, as we've sort of shown consistently, you can see the progression through the year of our CapEx. Tunisia, we've mentioned already, workers in Schwechat cider field, and preparations and long lead items and costs for the build-up of Sabriya's artificial lift program. Bottom line is EBITDA, $12.7 million. As we keep trying to remind everybody, the business is a strong cash-generating business. We are investing that into our assets, and that is how we are looking to grow the business for the future. So we're very, very focused on cash generation and reinvestment of that cash flow. Yeah, thank you.
Good. I think I've touched on most of the plans looking forward. The strategy remains the same. We intend to develop Sabriya. It has a 1% recovery factor, and we believe that we can increase that considerably. Romania is now focusing on exploration to find the next Martino. I think if you look at the Martino numbers, you'll see how valuable these gas projects in Romania can be. We do have exploration risk. We do try to minimize that exploration risk, and that's the purpose of first the block wide review, then the 2D seismic over the prospects. but there's no way that we can ever eliminate completely the exploration risk, as we saw with Moftino Nord and Canard. We think there's lots of opportunities, exploration opportunities in Romania, and we're eager to try to move those forward as quickly as possible. But we're not wildcatters where we just sort of plunk a well down here or there. We'll take a thoughtful and prudent view of reviewing the geological information, getting more information where we need it, and then we will drill wells. Following on in Tunisia, you know, we're very, very eager to get this pump in W1. It's been a tough workover. As Stuart said, the chunks of metal that are coming out of this well that don't show up on the old well reports is really quite amazing. It is progressing. I wish I could tell you that we'd be able to pull out those last chunks of tubing in one go today, but I can't. Those will be pulled out where they part. I described it a little bit like having a wet piece of spaghetti and you're holding both ends and you pull. You just don't know where it's going to part and what's going to come out. You hope it parts at the bottom and you can pull the whole string out, but it could part anywhere. Following that W1 workover, we'd like to, you know, as quickly as we can, get moving on to the other operations we have in Tunisia, and very much eager to see how this pump works and get a pump into Wind 12. Wind 12 is our best producer, and we're eager to see how we can do there. Environmental and safety. We have had no lost time incidents in Romania since the start of the Moftino gas plant. In Tunisia, we've got 2,391 days of no lost time incidents, and in Romania, we've got 1,347 days. The teams are very focused on safety, and like Stuart said, when we took acceptance, when we went through the rig acceptance with CTF, we found issues, and rather than rush ahead and get going with the workover, we made sure that CTF remedied all the issues we found. We've been very careful with this rig. After CTF defaulting on the rig contract, we've been very, very prudent with how we manage the rig. I think I would say that the operations from the rig and the crew right now are acceptable. We're happy with that. But we did take extra time making sure that rig was safe and doing our safety checks after rig up. So in summary, remain strong cash flow. Now, you know, clearly commodity prices have an effect on that, but in Romania, the commodity price is very much mitigated by that windfall tax. It's a non-linear, so the higher the gas price goes, you know, we grow, our revenue grows, but it increases at a decreasing rate. So it's really about managing costs to make sure that the cash flow is there for us to invest. It is a large asset base. So the assets are the assets, and the cash flow we have to apply to those assets are what we have. But it is a large asset base with lots of opportunities in it. The capital plans, I think I've touched on that. We're working on W1. We'll go to the N2 well after that. And if we can get approval from our partner in due course, we would like to get a pump into Wind 12 this year. In Romania, it very much depends on when we can get seismic and permitting for seismic going. If we can do that quickly enough, then we will try to get a well drilled on a prospect towards the end of this year. But again, the permitting is slow. We've talked about the permitting in Romania. It's very much a postage stamp checkerboard of farmers' fields, and you have to go to many farmers. I think there was 3,000 permits that we needed for the 2D seismic we did last year. So it takes a long time to get all the permits from all the landholders. There is good blue sky exploration opportunities in Romania. There are some big prospects. We've identified more prospects as we've done this, the block-wide review, and we will be updating our prospect inventory and updating our shareholders in due course as to the prospects we have. So we have identified more areas that we can pursue. But Romania is very much now an exploration area with Moftino underpinning that with the cash flow. And that is the results for 31st December 2022. I'll hand it back and we can take some questions.
Jeffrey, Andrew, Stuart, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few moments to review those questions that have been submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, you've received a number of questions, and if I may, could I just ask you to read out those questions and give responses where it is appropriate to do so, and then I'll pick up from you at the end.
Okay. So I'll start with some of the pre-submitted questions. What are the plans for the Sandcry well? Will the company drill a new well? Stuart, do you want to talk about that and how that works in with our blockwise plans?
Yeah. Yes, very much see the Sandcry area in the context of the study that we've had done. What we'd say there is that, as was said before, there remains a viable update target for that area. When we place this into an inventory that we're revising at the moment, then we'll take a decision. But right now, I would keep the well where it is. The potential sidetrack opportunity update, but we don't have the plans right now, as we're still finalising the prospect inventory revamp.
Thank you. What are the company's investment plans for 2023? I think we talked about that. We're continuing with the development in Sabria, in Tunisia, and permitting and timing permitting. We'd like to do some 2D seismic, and then we would like to try to get a well in Romania in 2023. When will the last ESP pump be installed in the Sabria field? The plan is to try to get, again, this very much depends on results from W1 and the timing of the approvals from our partner ETAP. So I think we've said we'd like to get Win 12 done this year, and then we would like to do the last pump sometime next year. But again, without the approvals in place, I can't give very much more definition than that, because as you remember, ETAP is a 55% owner of this field, and we do need their approval to proceed. Is it a good time to sell E&P assets? No. We have, what tends to happen when you have wildly fluctuating commodity prices is you have sellers wanting the high prices and buyers wanting the low prices. So we have a very, very wide, what I would call bid-ask spread between expectations on value. Certainly for us, we're not going to sell assets for 1 times cash flow, which is what we're being valued at right now. We will hold those assets and we'll take that cash flow. We're always happy to consider proposals. We're not married to any of the assets, but clearly those proposals have to exceed the value that we see in the assets. So if someone comes along and sees more value in the assets we do and wants to make a proposal, then absolutely we'll consider it. But on the other side of that coin, we'd also like to increase our asset set as well. So we would look at buying assets. We find ourselves in the same position. We've been active in a number of data rooms to look at acquiring things. We've put in proposals. Those proposals have not been accepted. And in some cases, the expectations of the buyers have been so much beyond any participant in the data room that those buyers have just held on to their assets. So it's not a great time to sell assets, principally because of the volatility in commodity prices creates a pretty wide expectation barrier. Why has there been no investor communication regarding the W1 well workover further to the company's RNS dated the 15th of December 2022? Well, I think we've talked about that. The simple answer is there's been nothing to update on. We are progressing with the workover. We will, when there's material information that shareholders need and has a value implication, we will, without delay, put out a release. but when it's an unpredictable timeline, and we try to give investors an idea of how long we thought it would take, it's clearly going to take longer. And to try to predict how long that takes, as we've talked about, is very, very difficult. The company shareholders approved share buyback, but management has so far shown a lack of confidence to perform this exercise. Well, no. Every year at the annual general meeting, the company gets permission from its shareholders to be able to buy its own shares up to 10%. That's not the announcement of a share buyback program. It never has been. We've been very, very clear when this question has been asked on previous quarterly calls that we do not, we're not buying back shares to the tune of 10%. We've also been clear that we're an opportunistic buyer of any asset. When we think an asset's cheap and we have available cash, we'll participate, and we have bought some shares back. But that we believe that the best allocation of capital in this business is to the opportunity set that we tried to lay out to people to show that there's great exploration upside in Tunisia and in Romania. If we got another Maftino, I think everyone would be cheering. $91 million of revenue out of that. Remember that gas plant cost $7.8 million. Right? These are very, very high returning, and we would prefer to invest our capital in our operations. Again, in Tunisia, there's a field there that's got 445 million barrels of oil in it with 1% recovered. That is something we should be allocating target cash to release. So our cash is always primarily designed to grow the business, but we have opportunistically entered the market. But I don't think any shareholder should believe that because we get a routine AGM approval to buy back 10% of the shares, that is what we're going to do. These results were strewn with red flags, the most worrying being payroll up while cash dropped from 8.4 to 2.8 in 14 months. With management seeming lax about the share price at all-time low, convince investors on this call not to cut losses and sell their holdings today. Well, Andrew, do you want to talk about the payroll? I'll say the payroll has not increased. We have not we haven't increased people. But Andrew, do you want to talk about that?
Yeah, so I think to be very clear about this, executive directors' payroll has gone down, decreased. Non-execs, there's a marginal adjustment, but that's FX related. Their payroll has not increased. Across the group, we've seen a bit of inflation. And so, that's the wider payroll has increased slightly, but that is very much inflationary linked to the staff across the group.
Cash dropping from 8.4 to 2.8 in 14 months. I think we drilled 2 exploration wells. We put compression on. We did the long lead items for 2 pump installations. Yes, we have been investing our cash as we've said we would do. I don't think management is lax about the share price at all times low. We're extremely frustrated. We continue to believe that there's upside in this business. We continue to try to explain that we work in difficult places. We wish we could give everyone an exact day when workovers would be finished or when things would be done, but that's not the world we work in, unfortunately. So we're not lax about this. We're very, very frustrated about the share price. The bulk of our compensation is share related, and we are not getting that. So we're very, very motivated. When do our other licenses expire? How many times have we been to Tunisia and Romania in the last 12 months? Are you not anticipating license problems? Why didn't you apply earlier than November? This is license issues. When do our licenses expire? Sabria is 2037. Schwesh is 2034. And Romania, we are up for a review of the license in October, and we're talking to the regulators about what we will do to continue the license. We have a very good conversation with them. How did you not anticipate license problems? Why didn't we apply earlier than November? We applied, and I'm not sure what the November is, we applied 18 months before the expiry of the Eschwech.
Dynamite, I think.
Oh, the dynamite, we'll talk about the dynamite permit. So anticipating licensing problems. No, we have never had a licensing problem before, nor have anyone else in Tunisia. What happened is we have a schedule, a statutory schedule under Tunisian law of when we can apply, and that's 18 months before the expiry of the permit. 18 months before the permit, the expiry, we applied as we are required to do under law. So we have followed the Tunisian process completely, but we have just not had any response from the government. Why didn't we apply? I guess we're talking about the dynamite permit. Why didn't we apply earlier than November? Because we didn't know when CTF was going to have a rig for us. Remember, they defaulted on the rig. We only found out that we would be getting the rig, and as soon as we found out, we applied for the dynamite permit. Again, the previous permit took 4 days. So even in the most negative assumption, we applied as soon as we could. We left 6 weeks for an application that had previously taken 4 days. That application ended up taking 4 months. So no, I don't think those are things that we could have anticipated. And even if we could have, we wouldn't have been in a position to justify the application of a permit 4 months ahead of time. What is happening with the buyback? Why did you make a purchase of 5,000 shares in October? We made a purchase of 5,000 shares in October because that's all the shares we could get. We have constraints on the buyback. Those constraints are written in the resolution to the shareholders. Effectively, it means we can pay 105% of the previous 5 days volume weighted average price. So we have a cap. Now, obviously, that's in place so that we're not able to go out and bid, 50 pence per share and try to artificially move the market. So we are a market participant. On the days when we see a price that we think is reasonable, we go into the market. We did not go in for the purchase of 5,000 shares. We go in for substantially more. But because we have to announce what we buy on the day, we can't spend 4 or 5 days accumulating. We were only able to buy that number of shares at the price we were able to offer. So no, we're not in the business of trying to buy 5,000 shares. If we're going to buy, we would buy significantly more if they're available. Do we expect to drill in Romania in 2023? I think we've answered that. Yes, we would very much like to drill in Romania in 2023. It's dependent on how quickly we can get permits in place, how quickly we can get that seismic, that confirmatory seismic, and then get a rig. The pump installations were delayed by the default of CTF. To what extent is CTF now operating? What impact is that having on the boost of production in Tunisia? CTF, how can relations with this key partner be improved going forward? CTF is the government-owned drilling company. There is no option. It's a monopoly. We have to contract through CTF. So CTF had one of its rigs fail, and that caused problems through its rig portfolio. And in the end, they defaulted on the delivery of the rig to us. Obviously, if it was a rig company in the North Sea, we would sue for damages. We are not able to do that with CTF, as suing the government would not be a great idea. We would probably never get a rig again. So how can relations with this key partner be improved? Well, the relationship was never damaged. They defaulted. They tried their best with what limited rigs they had. We're certainly not happy about that, but we have good relations with them. They're operating well on this workover. The rig is operating fine. We've had a couple of days of non-performance time while we had hydraulics on a top drive. They fixed very, very quickly. We've had some electrical cabling that we noticed and they noticed that had to be replaced. So we've lost a couple of days for non-productive time for maintenance, which is not hugely unusual. And I think the crew is working just fine. What impact will it have on boosting production? It will delay the boost of production. The delay to the workover is a delay to the boost of production. And it's as simple as that. It doesn't end the production. It doesn't, it just unfortunately delays it for us. How easy is it getting equipment into Indonesia? And what do these supply chain routes look like? How can they be improved? What about spares and repairs? Is it straightforward? It's improved dramatically. During the pandemic, well, let me say this, the big supply bases for North Africa sit in Algeria and Libya. They don't sit in Tunisia. And they sit in Algeria and Libya just because those are big producers and they have all the supply bases. When we had borders closed during the pandemic, it was very, very difficult to get things across. So supply chains, like the rest of the world, got disrupted very, very badly. And that pump delivery was the big one that disrupted us. So we had our pumps manufactured by Schlumberger. Part of it was done in Houston, part of it was done in Singapore. In the end, we would normally put those on a ship and send them to Tunisia. We had parts air freighted to try to expedite that and move things around. So how can things be improved? Well, we can take steps like air freighting parts. It's more expensive, and we have to be very careful about how we spend our money. But supply chains are very much normalizing. Spares and repairs, a lot of the spares come from Europe. Sometimes we've taken, in Romania, we have a very, very deep service industry. So there's been times where we've got parts from our relationships in Romania and had them shipped to Tunisia. But those are sort of normal supply chains in oil and gas. We would move things all over the world. The big supply chains disruptions of the last 2 years seem to be mitigated, seem to be normalizing. So getting spares and repairs are fine. Repairs in country, there's lots of technical people that make repairs. We make repairs to all of our fields. We have a repair shop in Sabria that can do most of the work for us. Spare parts, again, mostly come from outside of the country, but supply chains have very much improved. Cash last year at the period end was 8.4 million, cash at the period 4.9, cash at 28th February is 28, with no returns to shareholders. Despite all of the positive spin about cash flow and EBITDA, this is not a pretty picture. What will change to make this investment attractive? I disagree, I'm sorry. A cash-generated business that invests its cash into projects like ours that can be explosive in return, that's what we're trying to do here. Whilst the company is structured to be able to pay dividends to its shareholders, this is a growth company. We are investing the cash in growth. So your cash flow, your cash at period end numbers reflect the investment we're making in the business. I mean, very, very disappointingly, our 2 exploration wells were not successful. But that does not mean future exploration wells are unsuccessful either. An exploration well is just that. It's an exploration well. Upon success, the returns are explosive. Andrew mentioned the $90 million of cash that we've taken, of revenue that we've taken out of Maltino. Right? These are explosive, but they're also exploration risk. Not every well is successful, and very regrettably, that's just the business we find ourselves in. Do you see a profit for 2023? What actions are you taking to improve the share price? I think it's far too early to be able to comment on profits for 2023 with the volatility in commodity prices we've seen. We are subject to commodity prices, and that would have an effect on us. And it's been very, very volatile. What actions are we doing to improve the share price? We are investing in the highest return projects we can. I think the share price we need to have operational success, and two wells that did not succeed last year didn't help. What can we do? We can have operational success, and how do we do that? We pick the lowest risk, highest return projects we can, and we invest in them. What are we doing with the buyback shares we purchase? Shell and BP destroy theirs to reduce the share pool, increase investor value. What is our plan? We have bought back shares and held them in treasury. That has been a board decision. The board will decide in May whether those are canceled or continue to be held in treasury. Why would we hold them in treasury? They're currency for the business, and that's been the decision of the board to hold them in treasury. Please explain how SERINUS is a growth company. There's been negative growth over the 24 months. This cannot be explained solely on bad luck with exploration. Well, I think quite clearly SERINUS is a growth company. The exploration in Moftino is large by any standards. It does require exploration success. And the development in Tunisia is large by any standards. It's a conventional oil field in Tunisia with 445 million barrels. That's not our number, right? That's the reserve engineer's number. It's had 1% recovery. We need to expedite the growth. We need to manage it's a difficult regime to work in Tunisia. We make no pretenses of that. What do we need to do to show the growth? Well, we need to get the pump in W1, and we need to drill another exploration well in Romania. There's plenty of growth companies out there that have that are considered very clear growth companies that have a lesser asset base to work with. There's some that have never had success. That's the nature of exploration, unfortunately. What we're doing here is trying to be as prudent and manage the risks of exploration so that capital gives the best return. But when we do hit, one of these things can be explosive growth. So that's what we're trying to do. And that's the end of the questions that I have.
Jeffrey, Andrew, Stuart, thank you very much for that. I think you've addressed those questions you can from investors. And of course, the company will review all questions submitted today and will publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Jeffrey, could I just ask you for a few closing comments?
Yeah, thank you. Look, it's been a strong financial year. The great benefit of that is that we have cash invests and we don't need to go back to shareholders and dilute to continue to explore in Romania and develop in Tunisia. We do it with our internally generated cash flow. And that, upon success, we believe can be quite explosive. We continue to believe the strategy is a strong strategy. We know we need to show exploration success. We know we need to show success in W1. It's been a terribly frustrating year yet last year with delays in Tunisia and no success in Romania. We continue on with the strategy. It's not a bad strategy, but we do know we need to have operational success. And thank you for joining us. And thank you for your time.
Jeffrey, Andrew, Stuart, Calvin, thank you very much for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of SERINUS Energy PLC, we'd like to thank you for attending today's presentation, and good morning to you all.